Knowing what market structure you are trading in is one of the most important things to know when trading, and it could make or break your trade and therefore your profitability and thereby your whole existence as a trader in the Forex, crypto or stocks market. In this video I will show and teach you an easy way to determine what the structure of the market is so that you can make better trading decisions in advance. So before moving on to the actual video where I will show you the strategy of how you can determine the market structure, I think it is important to talk about why it is that important to know the market structure of a forex pair or crypto or stock. So first of all, I think knowing the market structure is important because some indicators only work in certain structures. So an example is the MACD, which only tends to work in trending markets. And second of all, it also helps you create a bias. So if you should buy or you should sell a certain asset, crypto or forex pair. And understanding the market structure means that you know what way the price is probably moving, and thereby you can create a bias. And last of all, it builds for you a general understanding of the market when you constantly analyze the market structure. So ideally, you will even one day be able to spot the moment a market structure is changing. So yeah, those are the three main reasons I think it is very important to know the market structure, and it is very important to know how to spot the market structure and how you can determine it. And now let us get into the method of determining the market structure. So welcome back everyone to the actual part where I will show you the strategy which you have been seeing on how to determine the market structure. I created this little template where I already used this strategy, but after that I will also do it over on a different pair or a different stock or something. But first of all, we are in a Forex graph. It's the euro against the US dollar. It's the 4-hour time chart. And so yeah, there's basically two main ideas to the strategy. The first is EMAs, which I have here. I have the 200 EMA, the 100 EMA, the 50 EMA, and the second one is these key levels. And key levels are basically levels where price has found support and or resistance multiple times, and these are very broad like zones where you can see here it hit resistance, and hit support. And using those EMAs and these boxes, those key levels, we can actually determine the market structure. So the leading indicator in this strategy are actually the EMAs, because the EMAs show a lot. For example, here the shortest EMA, like the longest EMA should always be in the bottom in an uptrend, and vice versa in a downtrend. And here you can actually see all of them moving up, with the shortest period above the 1-2 shortest period, and both above the highest period. And that way you can actually see that it is all going up. And you can also see that, like, this is of course a little bit of hindsight bias because we know that this is a very big uptrend, but you can also spot this when just trading. I mean, when you are right here, you can already see that these two are above the highest period, and that means that it is an uptrend. And here, for example, you can clearly see when the price is just easily going through all the EMAs, it is more of a consolidation period, which is better shown even right here. So when the EMAs are kind of moving in a straight line, which they are doing right here, that means that the market structure is consolidating or hanging, or that there's not a certain trend. So if we get back to the example I gave of the MACD, that means that the MACD would not really work here. Here you can see actually that the two lowest EMAs cross over the highest EMA. Then you can actually see another uptrend. So how do we use these key levels with them? Well, basically for visualization and to actually confirm the market structure. Because here you can see that The EMAs tell us that it is consolidating, but what do the levels say? I mean, right here we have one key level and it does not really break. It only breaks with wicks, and here it kind of breaks, but when it breaks here, you can actually see from the EMAs that already an uptrend is starting to form. So that gives you some sort of confirmation. Still it breaks, but then you see that it comes there again, and you might start to wonder, well, maybe it will actually break right now, which it did. And then it breaks, and then it finds support on this level, and after that it will go into an uptrend. And you can also see that there is not really a support level, but there is kind of. Here it found support 1, 2, 3, 4. Let's say 4 different times. And overall the EMAs tell us that it's consolidating, but it's kind of bouncing between two of these key levels, which in a minute I will show how to draw them, so don't worry about that. And then you can actually see that it breaks, and together with the EMAs then you can determine that the market structure is uptrending. And as I said earlier here, with the price bouncing between two of those key levels, you can determine, and the EMAs kind of crossing all the time, moving sideways, you can determine that the market structure is consolidating or ranging. Here we actually have a great example of the market turning again. Here you can see that kind of between these two support levels and this resistance or key levels, but here they function as support and here they function, this one functions as resistance. And together with the EMAs you can see a short kind of consolidation period. And then you can see the EMAs crossing over again, showing a downtrend. But to confirm the downtrend and to actually know it, you see that this first support key level area, it breaks. And if you zoom in here, it breaks and it retests immediately. And then you have this other support which has been tested twice. It also breaks and it retests here at the upper bound. And then you know that it is a downtrend. You have the EMAs telling you, but you also have these key levels confirming the market structure. And this is basically the whole strategy. You just use these EMAs to kind of visually show you what the trend is, or if there is a trend. And then you can actually draw these key levels, these boxes, to confirm for yourself whether a consolidation has been broken or whether a uptrend starts to consolidate, practically when a market structure is changing. So now I will grab a clean chart and I will show you how to draw this. So welcome back, and now I will quickly show you how to actually set up this strategy for yourself. We are at the same forex pair, same time frame, just a little bit more in the past. So now I will start drawing them. So I start with these boxes, or actually I started with these 3 exponential moving averages, but I have them put on the chart automatically. But you can find them here. You just type EMA and then it's the moving average exponential. You click on it, you press the input, and then I have one at 200, one at length 100, one at length 50, and then I color code them, but that's something for myself. You need not do that if you don't want to. So looking at our leading indicator, which are our EMAs, we can actually see here they are moving very sideways. I mean, you could have already seen it here, you could have already seen it here, you could have already seen it here. So now looking back in time from the future doesn't really mind, because it doesn't really matter, because you could have already seen it. And the EMA tells us that the market here is consolidating very much. And then actually drawing these areas, I mean, let's draw some in the middle as well, right here, and even right here. This seems pretty strong. And as you can see, a lot of support has been found throughout this whole consolidation. And then here you can see that the EMAs are crossing over the highest EMA. So the EMAs tell us that a downtrend is starting. but now you need confirmation from the key levels. So this was a confirmation, or this was a key level in the consolidation, but it has been broken quite a lot of times in the consolidation itself, or let's say twice like after this point, or 3 times it has been broken, like really. So you see that this is showing a downtrend, but that this breaks does not give us enough confirmation to actually confirm that it is a downtrend. But this lower key level has actually functioned as the lowest support it went to in the consolidation. So when it actually gets into the support, and you have already seen this signal by the EMAs, you start to think, you know, maybe it will break. And here you can actually see that it breaks and it never returns. So that is how to use it. Now you've actually seen here you could very easily determine the market structure which is consolidating. It's very obvious with the EMAs, and then you can just use these key levels maybe to place trades or to confirm that it is a consolidation. Here the EMAs show us a downtrend, and the same would happen with an uptrend, but then just the other way around. And with an uptrend it would probably like this key level would be the same as this. It would probably break, and then it would find some resistance at this key level, but eventually break as well. And then that would be an uptrend market structure. But here we can see that our key levels broke, and that shows us that it is a downtrend. Then you can actually, or I would suggest that you keep drawing these, just to keep understanding the market structure and to know when it is about to change. We might see another example right here. The EMAs start to come together again. And then you have, this is kind of too big. And then you have this key level and this key level between which it bounces again very much. And then you can actually see that it is consolidating again if you combine the price bouncing between these key levels with the EMAs which are moving sideways. So with having done this, I hope you can actually implement the strategy for yourself, that you know how to use it, that you know how to spot all the types of market structures, and that you can now do it for yourself. If you have any questions, you can always leave them in the comments down below, and I will make sure to answer them as quickly as possible. But for now, thank you for watching this video, and I will see you in the next one. Peace.